Good morning, everyone. Today is the 27th of September. It is a Friday. Happy Friday. We've made it. Big move yesterday, and actually quite substantial to the upside with the crush pattern. We did gap up quite a bit higher. Let me try to show you this here. And this is the SPY chart. We're moving into the end of the week, and I've got to basically just let you know that we're looking at around, this time frame right in here. Try to highlight it as early topping. Okay, this is going to be an area here where we could very easily get into an early topping congestive phase. Might be a little higher, might be up into the 605 area, but that is something I'm concerned with in the sense that we are now only about a week and a half away from what I would consider early topping. And that means that we have a period of time here, probably 7, 8 days of trending. I took a look at some of my other custom charts yesterday, and we are definitely moving into or already into trending. Okay, we have moved, very solidly into trending, weakening US dollar demand, meaning that US stocks their capital is shifting, not necessarily stocks, but capital. I talked about this yesterday in a comment about how I view capital. So capital is like a living, breathing entity. The way I explain it to people is that imagine you have, I don't know, a creature, call it a squirrel or a rodent. I don't know. A rodent's a pretty good example that's living in some environment. It's got a fairly limited reach as far as territory, maybe 100 yards, maybe, I don't know. But its whole world exists within that 100-yard radius, right? Call it 50 yards one way. So the whole idea here is that that rodent's entire world, its safety, its security, its ability to feed itself, its ability to have opportunity to grow and have other rodents around to grow a family and to populate. That's all got to be handled within, say, 100-meter area. Okay, so now if that 100-meter area becomes hostile, say a new predator moves in, or say the food supply dries up, or say it floods, or I don't know, it dries out. So the whole idea now is that that creature, that rodent, needs to find a better, healthier place to live. So it would travel outside of its 100-meter radius, likely, to try to find some place or some food to supplement the drying or the more hostile environment. And capital is the same way. Capital is just like that little rodent. It must always find safety, it must find opportunity, and it must find value. So always look at capital flow as trying to seek those three things in balance: safety, opportunity, and value. Just like that rodent wants safety, opportunity, and obviously the value for the rodent would be that it can go out of its home and it can fairly easily find food, find water, find security, find materials to build its nest. In other words, it's an opportunity rich type of environment and doesn't have to travel very far to go find that real value. So that's what capital always does. And if you think of capital as always shifting into what is most secure, then and most opportunistic and the best value, then all you need to do is really start understanding where that proposition exists. The Fed lowered interest rates as a way to, in my opinion, take the lid off the economy. It had been battling, and I did videos on this. You can see on YouTube. The Fed had been battling inflation while the global markets were still trying to spark growth. The Fed beat down monetary flow and inflation over the past 2 years, and the Fed gave in to a 0.5% rate cut simply because they are being more reactive to the pressures on the global market, clearing the way, in my opinion, for a move back for capital to move back into a more speculative phase. And in doing so, the safety and the opportunity and the value had been to avoid currency risk and move into US dollar based assets. That's where the real value had been over the past 18 to 24 plus months. Now, with the Fed starting to lower rates and telegraphing that it will continue to lower rates as need be, now that value proposition, that safety proposition, and that opportunity proposition, if you were to weigh it, I would still say the safety proposition still is in US dollar based assets. The opportunity position is to move away from some of these blue chip stocks and move possibly back into more speculative, undervalued stocks. And again, of course, the value proposition starts to play out where we start to see these undervalued stocks come in. So there's going to be, in my opinion, a portion of capital, probably 20 to 30, maybe 35% of the total invested capital is going to start to move into these undervalued sectors. And we'll talk about some of them in the future, but that highlights the QQQ and some of these undervalued sectors. And that's what I need you to understand. If the Fed continues to lower rates, I'm going to come out here. Actually, I'll come over here. So here's the Qs on a blank chart, right? And if the Fed continues to lower rates, what we're likely going to see is we are likely going to see some sort of a melt up here into 2025 and 2026. You can see these channels. I'll do my basic analysis for you. We have these price channels here. We'll come in here to blue, extend to the right. We'll copy this, put our outer channel in this area, copy this, put the extended outer channel here, make it a slightly lighter color. Control CV, put our outer channel back over here. And I try to make these about the same width, guys. So about that same gap width in price. We're already above this ultimate high here for and we have gotten cleanly above this. We are already at the new ultimate high up here, trying to break above this level. And what we would likely do if we were to come back here and try to take a look at some of these deeper channels, we could come off of these deep lows. Let's go off of here. I don't like using single isolated lows. Okay, extend, make this slightly different. There's a decent low. There's a decent low. We'll come across these highs. Nothing there. Little bit there. All right, that's pretty good. So you can see how we've rolled across some of these critical highs here. And we don't have anything here, which is going to be acting more like support back down in this area. So you can see how we played this out. And if the capital continues to roll, what we're likely going to see happen is we're going to roll within these ranges up into 2026 and 2027, moving slightly higher into this channel. Now, we could move into a more aggressive channel straight up, and that will come in time. But we do have, resistance right here in this area, this red line carrying all the way out. You might want to grab a screen capture of this. And then we have that real ultimate support back down here, which is slowly moving upward. But beyond that, we have this channeling range, which is going to keep price probably moving upward into this channel for quite some time. We've already been here since the base and bottom, and now the Fed is releasing the cap, so to say. And as long as the Fed continues to release that cap, it should continue to move higher. So, okay, let's, before I waste too much time, go back over here. So we're looking at a gap potential today. I believe the gap potential will be to the upside. Let me come back over here, spread this out, drag this upward. And where we're looking at here, folks, is trying to, oh, no, dragging my drawing things around. We're looking for an upward price gap. You can see we closed down here a little bit. I'm looking for the price really to be probably in this 573, maybe 573, 20, 30 area at the opening. We're at 572.43, slightly above yesterday's close. We did have a higher high. We did have a higher low yesterday. We're in an uptrend. This is still an uptrend, even though it's a black bar. We do have the gap potential, which is not indicating a big breakaway. A breakaway pattern would mean we'd see a higher close. So we're just looking at a gap potential in trending mode today. And to be honest with you, I'd probably drag this back down into this area and say that we're going to be inside this range, probably below 579, 580 today as a close. Don't expect it to be a huge day, but I do expect then the following week, remember, we're moving into a inside breakaway, harami, another big crush pattern and trending, a reversal rally, and then the up, down, up in counter trend mode, which would mean down, up, down potentially. Then we get into gap up lower on the 7th, gap breakaway, carryover, inside breakaway. And this is where I think we're going to start moving into that topping pattern. Not necessarily here on the 4th, but over here near the 9th, 10th, 11th, 12th, 13th, somewhere near the end of this week, early this week, I think we move into topping. Okay, let's take a look at the QQQs. Same type of setup. We have that rally phase coming in today. Again, this is a gap potential. We're looking at a potential gap here. This is slightly lower. I think we're going to move a little higher prior to the market. So I would be looking for probably right in this area, 490.35, 490.50 as a opening price level. And we're probably going to stay within this range tightly, attempting to move higher into the close is what I believe is likely to happen. We're still in bias mode. We're still in trending mode. Capital is shifting. The Qs are going to try to move as I drew this. Let me get rid of this. And the Qs will likely, because of shifting capital, try to move up into this rolling type of a topping pattern up into that area. So be aware that, ultimately, I think the Qs are trying to roll back up to this 501, 504 area and really try to test this ultimate high level. Remember, the QQQs have just gotten above this unique high. We're clearly in a rally phase. We've got new higher high, new higher low. This is rally mode, guys. Even though that black bar, could be contentious, and I could argue that, wow, this is a star-shaped pattern. It's a gapping higher. It's a black bar. We could get a rollover. Yeah, there's a chance we could get a rollover here with a dark candle, a black candle, and setting up some sort of like an evening star formation. But this really isn't a star candle. It's a big candle. It isn't a gapping formation. So, there is a chance we could see a Three River evening top type of formation over here. But it all depends on what happens today. And we are in that early breakaway phase. We are in upward trending. So I would say we have like an 80% chance of upward trending to continue versus a 20% chance that we see some roll down retest support on some sort of a topping pattern. So again, very low probability that a topping pattern is going to occur, especially after this fairly solid breakaway mode. Yeah, we could get a little bit of rotation today, but then we're going to probably move higher eventually. Okay, so let's go to gold. Gold is contracting a little bit. You can see it right here. Spread my chart out. You can see gold moving slightly downward right here. I had warned that we were going to get up to 2700, 2710, 2720. I really told everyone once you get up into this area to start booking, really call it good. It looks like we're going to get another surge. So, I mean, if my analysis is correct, and you all know that I'm human, I make mistakes at times. So, please understand I'm doing my best to try to guide you and help you. But again, I've explained the shifting capital. I've explained how safety and security play a big role. I've explained how value plays a big role. And what's happening in gold and silver is that gold and silver are hedging global risks. As the Fed uncorks the genie, so to say, and gets us back into that speculative type mode, or a little bit more heavily into that speculative type mode, what you're seeing here is you're seeing gold aggressively move upward, hedging global risk, realizing that there's still a lot of underlying risks throughout the world, and the Fed is in a way letting the beast out, letting it must move back into that speculative mode. But gold will hedge it, and silver will hedge it as well. That's why we've got a very long-term move up in gold. Hold on. A little sneeze this morning. And what we're going to do, folks, is we're probably going to expect a little rotation right here. So you don't want to chase gold this morning. Gold is at 26.90, down a little bit. I expect it will probably end up back here at 26.70, maybe 26.60 as a deep, deep pullback. But you don't want to chase gold right now. Probably by Monday or so, looking for lows on Monday to catch the last little bit of this move up to 27.10, 27.20. That would be a much better play than trying to find out, try to catch a long here. I don't think there's going to be much long into the end of the week here. In fact, I'll be honest with you, I expect that in the general markets, the SPY and the NASDAQ as well. We're going to open hopefully with an upward gap in the general markets, the SPY and the QQQ, but we're going to try to, we're going to try to move into an end of week phase, meaning capital is going to really just look for safety. And I think what you're going to see here at the end of the week, end of today, is it's probably going to be melting upward and slightly flat. That's what I expect. Same thing kind of here with gold, although I wouldn't say melting upward. I would say consolidating downward into the 2670, 2660 area and melting kind of flat right over here, right into this area. In fact, if I were to take a guess, I'd probably say this 2674 area right here is a pretty solid end of day expectation, I think. Again, my opinion. Okay, silver. Same type of setup, folks. We've had this big rally. I mentioned to you how we would have to really break above this level here. We did get briefly above here. We were rejected. So now rejection is something you need to pay attention to. Let me leave this here. Rejection reflects the fact that price tried to make a move and failed. So think of this as like a battle on a battlefield. You tried to take new territory, you lost. You came back right back to where you were. That's rejection. That means that there's very strong resistance up here. And until we get above resistance here, we're going to look at silver trying to move, potentially rotating downwards. So I'm going to leave that deep V out here somewhere. And what this suggests, folks, is that silver, much like gold, is going to have to move up into a consolidation phase and maybe get into a last breakaway before we get into that deep V move, which I think is coming around keep telling you, the 9th, 10th, 11th, 12th, somewhere around there, actually between like the 10th and the 14th, more than likely. So where we're looking at is we're looking at silver solidly up into this upper range, clearing these new highs, setting a new high, getting rejected. It's got to get above these levels here, these levels, in order to try to make a bigger move. It will, in my opinion, get there based on what I'm seeing and trying to move higher, but not right now. Maybe next week, maybe mid end of next week. Okay. And we'll see. And then, like I said, I'd be very cautious right over here, right before the election, of some event, some, I don't know, news item. It seems like it always disrupts the markets right before an election. So we'll see. Could be Russia, could be Ukraine, could be China, who the heck knows. But just be very cautious that last 20, 30 days before the election, which is really, right in line here with my 10th through the 15th of October timeline for a peak, because it seems to happen every election year. And so I'm going to just warn you, it's almost like clockwork that there is some disruptive event. Don't know what it is, but there's going to be some disruptive event. Okay, lastly, we'll go to Bitcoin. Big move to the upside in Bitcoin. And again, think of that capital safety. Okay, I didn't expect Bitcoin to really make this move. I still don't expect it to move generally higher right now. But I will tell you that capital is moving into more speculative sectors. Bitcoin and cryptos are a speculative sector, in my opinion. Because the Fed has cut rates, that's taken a small portion of capital, probably 20, 30, 40%, and said, hey, go play, go have some fun. Everything's fine. The Fed's lowering rates. So, given where we're at with this move, and given the fact that we're up near this upper channel, we got to watch for rejection across this upper channel right here. Try to make this a little brighter for you. Bring to front, make it bright color, make it bright color. Oops. Bright color. Okay, so here's that's not going to work. Let's pick a different color, light blue and light blue. Okay, so here's our real channeling area right here. And you can see we keep getting rejected. And you can see way back here, rejection, rejection, rejection. It's been pretty common. So at this point, where we're at would be a fairly common rejection point. You can see I've highlighted these downward cycle trends. I think this is kind of what needs to happen for Bitcoin as we roll into the election. I think right in this area, October 9th, 10th, 11th, 12th, again, this area right here, I think we're going to be looking at basing and bottoming. Okay. It's going to be basing and bottoming. And that's really where we're at on this move here. We are going to be basing and bottoming in this area. And that's where I'm looking at for Bitcoin to move over the next 2-3 weeks, really into this lower area, 59, 60,000, building a base and then rallying out of it through the election. Remember, I think anybody gets elected is going to have to admit that, Bitcoin and cryptos are the digital quote unquote currency, call them whatever you want. They're just a storage container, a digital container of, hype right now. The 21st century hype is Bitcoin and crypto. And I had a long discussion with a client just a couple of days ago about this. And is it a currency? No. Is it an alternate asset class? Maybe. What you have to really come down to the fact is, it is essentially a storage container. As long as people believe that there's value there and that people want to throw money at it, then it will maintain some sort of a value, just like Beanie Babies did back in the 1990s. As soon as that perception disappears that it's of real value and it is a storage container of real wealth, then the entire premise of Bitcoin and crypto kind of disappears. Even though there's only a limited number of so much Bitcoin that's going to be produced, If there's no real value proposition going forward, meaning that I don't see it holding value, I don't see it gaining value, I don't see it becoming more valuable, then the whole premise of it disappears. Okay. And that's just like Beanie Babies. Now you can find them for 3 or 4 bucks instead of 3 or 400. Okay, I'm running out of time. So happy Friday. You know what to do. Tell me what you think about my comments. Lots of great comments from members and followers. Again, doing my best to help you. Remember, I'm human and I am wrong sometimes, but generally, I like to think that my content is much more valuable than just repeating the same old stuff over and over. I make decisions all the time based on fresh data. I will change my mind. I will update my charts. I will alter my analysis as we go. That's part of what being a trader is. You can't just get married to a position and then throw capital at it. You have to adapt, grow, and change as the markets roll back with us. So the idea is staying ahead of the markets on a regular basis. Okay, 72.55. We're moving a little bit higher. I'm going to end it right there. We will see you guys maybe a little later. I may do a midday video just to give you a little feedback. But like I said, moderate trending, probably going to end somewhere today below 577, 577 and a half. Okay, guys, talk to you later.